All right, I'm gonna record now. I'm recording. Welcome everybody. Today is the 11th of May, 2026. We are trading the London session. We are trading the DAX and Nasdaq as usual. So currently, right here on the Nasdaq, we just reached all-time highs during the Asia session, and this is the highest point of the Nasdaq during the Asia session. Um, I just want to remind you, by the way, if you're doing long-term investing and you're investing in the long run, basically every time there's a war or there's a crisis or there's something happening, that is when people pull out their money from the market. And that is exactly when usually we like to invest money in the market. Because when these moves happen, people you can see this is stress. This is fear. This is fear of missing out. This is fear of losing their money. And this is basically when we like to buy right there, and then right there, and then right there, and then right there, and then continue buying a little bit to the upside. So we are always entering these moves. So these are when people freaking out, and this is when we gain the most profits. Because in the long haul, on the Nasdaq, on S&P 500, on the DAX, on the UK 100. Let's see the UK 100. We are always in a bullish trend. This is typical one-on-one investing for the long run. So if you look at the UK 100, the same thing is happening. What happened around here? But you see. All right. I digress. So I'm recording right now. We have currently no bias on Nasdaq, but I'm waiting to see hopefully a school run today, but we'll see. We don't need to force anything. This is Monday. I just wanted to show you this accumulation, accumulation, manipulation, and distribution. This is what the market usually is doing. It's accumulating during the Asia session. The manipulation is during the London session, and distribution is during the New York session, right? So we are accumulating pretty heavily, we did accumulate pretty heavily on the Asia session, and it didn't give us really a break of structure to the upside or the downside. But I'm assuming that we are continuing to the downside a bit right there. I'm going to mark this out as red to wait for a break of structure to the downside in about 7 minutes when the 1 hour candle closes. If I jump to the DAX, you can see that these are this is the overnight range right there. I'm looking and seeing what we are about to do. It looks like we are currently in a bullish trend because of the break of structure happening right here, but I'm not really trusting this, to be honest. Why? Because the overall bias, the high time frame bias, is bearish. And what happened around this break of structure? There was a fair value gap that got respected pretty good. Fair value gap entered this way. So are you telling me that you are continuing to the upside and taking out these moves? Maybe not. Maybe this is a respected area and then continuing to the downside. Taking out these fair value gap areas, these moves, taking out these liquidities on the 1 hour. Yeah, there's a bit of uncertainty today in the market. It didn't get swept. Right. We're observing the market today. Let's see what's going to happen. I'm going to mark this out as a 1 hour liquidity just to not forget about it. I'm going to put my bias right there. You know what? I'm going to do this because I'm not certain yet. You know, when we trade and there's a voice in your head telling you, should I take this trade? And you're, you know, it's not, if it's not a 10 out of 10 trade, then you're not going to be happy with the loss, basically. Because you weren't certain, or we weren't certain in our decision making. All right, the market's about to open in 6 minutes, and I'm going to grab some coffee and I'll be back. All right. All right. I'm back. How's it looking? The market's about to open in exactly 1 minute. I'm marking out these 50-minute liquidities right there. I'm setting an alarm. I'm just watching the market, seeing what it's about to do. By the way, I just made a post today regarding the Excel sheet, equity curve Excel sheet. This is the one that you feel free to use it as long as you can use it both, not as long as. You can use it both in your back testing. You can back test even your risk management strategy. You can back test and see your equity curve, how it grows based on the trades you're taking. Basically, is how you do it. You back test, you see in something in the market when you're back testing, and then you're taking the trade, and then you're entering here, just like as a simulation using the back testing environment for it, so you can get a sense of how this works. So feel free to use it. You can just press on this and then copy it to your drive, and then feel free to use it. This can be used for the slow track system, risk management, and the fast track. It doesn't matter really. Yeah. Market just opened. Let's see. All right, it didn't break structure. This was not let's see what's gonna happen. You're telling me this is gonna go about 80, 90 pips. Well, look at that. I'm setting an alarm on the top of the overnight range. Right. I prepared my right. It's continuing to the upside. We're not doing anything yet. I'm marking out this. This is not really a fair value gap yet until this 50-minute candle closes, but I'm still keeping it in mind. I realized that when the 5-minute candle closes over the overnight range, it continues the move. But I'm currently waiting and seeing. All right, I'm gonna enter the position. Right, let's see, right there. I did an early entry on that position. Putting my stop loss underneath this area right there. Exactly underneath the fair value gap. Checking the NASDAQ, continuing. Well, a spike down. This, yeah. I use the FTSE as a reference. Right. I just bought, added to the position right there. Willing to take the risk. we go. I'm marking out this yellow line as the second entry. There we go. It's easier to keep a track on it and keep the chart clean. So I'm removing these to keep the chart clean. And let me see the NASDAQ. Let me see the FTSE. Nice. Look at the FTSE continuing to the upside. There are highs. So the first 50-minute candle is about to close in 3 minutes. Wait and see. There is a 1-hour liquidity resting right there. Now, the 50-minute candle closed. It didn't close outside the range. So this is quite a risky trade. Especially that it's with heavier risk than usual. Looking at the Nasdaq, it's continuing to the downside. The DAX is continuing the school run. This is the second candle, giving it a try, going to the upside. It's a bit undecided, as you can see. Looking at the FTSE right now, it's reacting now with these highs right there, but there is no highs on the DAX to react from yet. So we should be patient with it. Currently at where I put my second entry on the DAX. You can see on the 1 minute, it did a clean break of structure right there, entered the fair value gap right there, and it reacted beautifully to the downside right there. So it can continue to the downside and it can take us out. But still, there was no liquidity resting above these areas that it reacted from. Let's go into the downside. Basically, all we can do right now is sit and wait. Right. Let's see what the FTSE is doing. Looking at the FTSE, seeing it dropping down like massively by reacting to these highs on the 1 hour right there. The DAX, there is a high probability of it following along. Still, market can do this. There are higher highs, higher lows, higher highs created, a higher low can be created right there, and then continue into the upside, creating higher lows. Same thing goes with the FTSE, and if the Nasdaq continues to continue to the upside, it's still accumulating, as you can see on the 1 hour time frame. On the 15 minutes, it's still undecided. There's liquidity swept right there. There's a breakout structure right there. There's a that's a 1 minute model setup. But however, we don't know where the market is going. Bullish, bearish. It's conflict in the trend on the Nasdaq. So we're not sure. However, it just swept 1 hour liquidity, so it might do a reversal to the upside. 50-minute candle is about to close in 1 minute and 15 seconds. I'm looking for it to reach this fair value gap area right there, to drop down to this area, and then reverse from that, but not take me out. Let's see. Just reached about the 50% mark, not entirely. Now it's closed the 50-minute candle. Let's continue into the upside. Like this is what we want to see, right? We want to see a direct spike to the take profit area, but it doesn't work that way, especially on the 15 minutes. The 15 minutes sometimes it just rallies or drops or spikes to the upside or the downside, but it usually takes longer. Not looking good. We're about to get stopped out pretty soon. There you go. Stopped out a larger position. This was a 1.5% risk. This can still continue to the upside, but I'm waiting for it to sweep liquidity like it did right there. Maybe give a 1-minute model. I'm removing the overnight range box. There are two 50-minute liquidity areas. I'm also marking out this low right there. Currently waiting for the 1-minute model. For the 1-minute model to give me an entry. I'm waiting for this. Did a liquidity sweep right there. I'm gonna remove this, by the way. Did a liquidity sweep right there on the 15-minute, waiting for a break of structure and a fair value gap to continue to the upside. There is also possible entry right here on the, because of the fair value gap reaction that it's been done right there. There's a possible entry right here. Break of structure, fair value gap. We respected the fair value gap area. And then it's continuing to the upside. There's a fair value gap right there, waiting for it to be respected. It still didn't give us both of them, fair value gap reaction or a break of structure. This is what I'm looking to see right there, and then continue to the upside. Or in this area. It's reacting right now to the downside. I'm waiting for the 1 minute fair value gap to be a bit respected until I enter. See that the Nasdaq is continuing to the upside. We might miss this move, and it doesn't respect the fair value gaps right there and just continues to the upside. If the DAX get respected, the potential stop loss area would be right there on the liquidity areas. An entry would probably be based on the reaction on this fair value gap or on this fair value gap. However, we haven't had any break of structure yet to the upside for us to enter. So if it does a break of structure, then the fair value gap entries directly from the fair value gap will be valid. Because there is no break of structure to the upside. There is no body of the candle closed over the wick of the candle next to it. There's a high right here, there's a low. This closed on the wick. There's a high right there, and there is no close next to it. Right, so break of structure has been created right there. So we're just waiting for a fair value gap reaction. These wicks usually mean that the market's continuing. There is no move to the downside. These long wicks right there and closed up right there. But we need a reaction. We need a fair value gap reaction to be able to take the trade. The 1 hour candle is about to close in 7.5 minutes. We have the 1 hour candle that's about to close in 1 minute. We have a reaction to the fair value gap right there. I'm waiting for the seconds to drop down. I'm not taking this trade. I'm not taking this trade. I don't like the way it looks, to be honest with you. There's no break of structure on this side. The only break of structure that I see is happening is right there on the top. So this also indicates to me that it's not strong enough. Like if we had break of structure right there, like more than one, okay, I will be able to risk some amount to continue to the upside. So if the market gives us a reaction at the fair value gap but doesn't sweep the 50-minute liquidities, then it is still a valid trade because I thought it has to sweep the 50-minute liquidity and then give us a fair value gap and break of structure, and then we can enter the trade. So if the market gives us a reaction at fair value gap but doesn't sweep the 50-minute liquidities, then it is still a valid trade. It has to sweep. It has to sweep liquidity, like in this scenario, because it swept the 50-minute liquidity right there. Liquidity sweep, and then a break of structure or a fair value gap reaction, and then it is a valid trade. Yeah. So this was a nice trade right there. I didn't take this trade, but the reason why it was a nice trade, but it missed one thing. It missed the trend defined before market open. So before market open, I couldn't define the trend. The overall main trend is, of course, bullish. We are at all-time highs, and that's what happens in all-time highs. All-time highs are difficult to trade. I've seen a lot of shorts. As soon as I open social media, we are on NQ, all-time highs, and people are having a hard time trading these all-time highs because there is no liquidity on the left side to indicate where the market is going. So because we didn't have any clear bias, clear definition of trend, this trade wouldn't have been valid. Um, and I can also add sometimes when the fair value gap is re-respected, I usually take a very tight stop loss and a very tight take profit area because it usually spikes up, takes out the liquidities, and then returns to the downside, like it's doing right now, like this one right there. We closed the 1 hour candle. All right, let me reassess and see what am I waiting for here. All right, it did a liquidity sweep. What trend are we? We are you know, I don't want to force anything here. It feels like I'm chasing price. Swept 50-minute liquidity. There is 1 hour liquidity resting right there. That's not been taken out. I'm gonna remove this. I'm gonna remove this. See, I'm glad we didn't take this trade, or else we would have been stopped out. Moving this. I'm waiting. I'm setting an alert on this 1 hour liquidity because this is a high time frame area where the market can reverse from. So I'm waiting and seeing. Now this is a nice trade. If it closes break of structure right there, give it 1 second to, did it close? No. You can see that the Nasdaq is continuing to the downside. I'm using this long tool just to have it as a reference. Now, this is what I did. I took a trade right there. This is the espresso, and this is what I'm doing because it's going to close basically underneath the fair value gap area, hopefully. There you go. And it's going to continue to the downside like the Nasdaq is doing. This is a risky trade. But I'm going to give it a try. Because if we look at the overall, like, are we really bullish? We swept liquidity right there. And if we didn't take the school run and the reaction to the upside, this is a beautiful trade right there that we didn't really miss because our bias at this time was bullish. And it gave us a clean fair value gap reaction here with a small candle to the upside, to the downside. This would have been a beautiful trade, taking out the first liquidity area right there. But at that time, we were bullish. So I'm taking this position right here and seeing what happens. Looking at the Nasdaq is spiking to the downside. Now, is the DAX going to do the same thing? We're not sure. Look at those. Yeah. Right. All right, got stopped out again. This was a huge losing day today. All right. Let's recap a bit of what happened today. Today, I have to be honest and say this was an impatient day, and this is where I chased price. This was a chasing price day, unfortunately. So on the market open, We took a long position right there, I believe. Someplace right there, and we put our stop. I put on my stop loss on this area right here. Um, and take profit in these highs right there. So this is the overnight range. So I marked out the overnight range right here, and I took a position earlier before the 50-minute candle closed. And also when it continued to the downside and gave me even a better entry, I believe I took the entry right, another entry I added to the position. I took a 1% trade and then I added a 0.5% to the position right there to have it to have the school run continue to the upside. Now, when the 50-minute candle closed, it closed unfortunately inside the overnight range. Now, improvement points to the next time. Wait for the 50-minute candle to close. If the 50-minute candle does not close before the 50-minute candle closes, there's no trade to take. Now, we waited until, because we were still bullish during that time, we waited for the first 50-minute liquidity to be swept right there to take the trade. And this was what happened. It didn't give us a reaction to the upside, and it gave us only a breakout structure right there on this area right here, and the fair value gap reaction right there. That was a bit far away from the fair value gap itself, and the breakout structure on the 1 minute was not that strong to indicate that the market is going bullish. Now, it re-respected the second fair value gap right there, and it continued to the upside. Now, I took a short right here because one of the reasons was because Nasdaq is continuing to the upside, to the downside as a bearish trend. The DAX did the opposite. This doesn't usually happen. And I took the trade based on the fair value gap invalidated on this area right here because this candle closed underneath the the fair value gap area. So, and because there is high probability, uh, higher time frame liquidity resting right here, I took the trade on this area, put my stop loss underneath this area, and my intention was to see this liquidity area maybe get swept and then the market reversing to the other direction. But it didn't. All right, that's it for today. I don't want to take more trades, and that's unfortunate that we are continuing to the upside right now after our two stop losses get taken out. All right, that's about it for today. If you are trading the New York session, I'll talk to you then. If not, then I'll see you tomorrow. Have a great day and have a great rest of your Monday. Take care.